All right, folks, thank you for joining me. Today's date, January 11th, 2023, and we have an absolute massive session coming up for you guys. Andy Schectman of Franklin, what was it? Franklin Miles there? Miles Franklin.
Miles Franklin.
I apologize, Andy. We have
Don't worry about it.
Andy
It's all
joining
good.
us on the show here today, guys. We're looking to run it up. Drop some comments, questions down below. I'll see if I can pick up anything. But we got a lot to talk about, Andy. We're going to be talking about how big this problem has got, comparing the great financial crisis of '08 versus the everything bubble that we are in today and that has been popped. And we see it continue to break down day after day here. And then we're going to get into the BRICS plus versus the West. The showdown here was a currency war. Now it's a commodity war. And we're going to break down that situation before we get into the new financial system. Andy, it's an absolute pleasure and an honor to have you here today with us.
It's great to be here, Zach. Thanks for having me, brother. I appreciate it very much. Looking forward to the discussion.
And guys, it's milesfranklin.com. And I know that you can find Andy on Twitter as well. Andy, is there anywhere else that people can get in touch with you?
Yeah, our new website, it's been a real source of embarrassment for me. We had to stop with our current developers midstream and bring on a new one. It should have been done months.
Uh-oh. Andy, are you still there?
To send us an email at info@milesfranklin. They could ask any questions. Info@milesfranklin.com. And touch with them immediately. If you want to be called, put your phone number down. If you just want prices, let us know. And we would be more than happy to make sure that your listeners get special treatment. Just put Zach sent me in the subject line, and we will take extra effort to make sure that they are treated as friends and family. And it's
Yeah.
kind of the model
Andy,
that we've been using for a while now.
I apologize, Andy. You got a little choppy there on the connection. I don't know if that's my end or yours, but we caught the tail end of that. You were saying just head on over to milesfranklin.com. Is that
So I see what happened here, and I'm going to have to switch you to a different network. That's my end. Give me 1 second. It may freeze. Just give me.
okay? Okay. That's all right, folks. While we're waiting, make sure you guys smash that thumbs up for us. Remember everything. We have the links on down below for the website. And yeah, we're really looking forward to this session here with Andy. Once we get this technical difficulties dialed in, this is going to be a massive session. So for those of you guys who don't know, Miles Franklin, been in the industry
There we
here for
go.
precious metals for 30 plus years of dependability, and definitely a place to get your precious metals if you're looking to take advantage of this suppressed assets. As they're getting ready to break out here, personally, I've been showing you guys. I've been stacking my silver, right? Picked some up the other day, got the 10-ounce bars, and we just continue to stack and dollar cost average into the suppressed assets, silver, precious metals, and also our cryptocurrency digital assets as well. Andy, are you back with us?
I'm back with you. So I was saying, send us an email at
Yeah.
info@milesfranklin.com. Ask any questions, request a price sheet. I think you'll be glad you did. We won't be undersold. Never had a customer complaint in 33 years. We'll make sure your listeners aren't the first, but put Zach sent me in the subject line, and we'll make sure they get special treatment and immediate response in terms of any questions that are asked.
Yeah. Okay. So let's get right on into it, Andy. I know we got a lot to cover. This situation is developing on a daily basis, and I just continue to put out my content where I'm sharing the update on the current events, the cryptocurrency, and what I call the greatest transfer of wealth in world history. And I think it's up to people to determine what side of that transfer of wealth are you going to be on. I wanted to get started, though, just to get people an idea of the scale of the problem that we face here today. So we saw the great financial crisis of '08. We saw the derivatives and the manipulation that was used to prop up real estate and some of the other markets. But now, today in 2023, we are truly in an everything bubble that has popped. And, some of these assets definitely have been in decline over the last year. They don't want to call it a recession. What do you define the last year, and how big is this problem that we face here today, Andy?
Well, let's put it in perspective. First of all, the Dow Jones has been in existence since 1896, and there's no debate that Wall Street loves low rates and easy money. And at the end of '08 and '09, the Fed balance sheet was $800 billion. You have any idea, Zach, what the Dow Jones was at the end of 2010? Any
Uh,
idea?
I'm not sure.
Well, 10,000. It was 10,000 at the end of 2010 after they started pumping money back into the system and suppressing rates. And so it took from 1896 to 2010, 114 years to get to 10,600. Sorry, that's what it was at. It was 10,600. It took 114 years to get that far. And in the last 12 years, it's gone up to 34, almost 35,000, a gain of 24,000 points in 12 years. And that's courtesy of a Fed balance sheet that has expanded from 800 billion to 9 trillion. And when you talk about what the Fed balance sheet expansion is, it's an accumulation of US Treasuries and mortgage-backed securities primarily, which suppress interest rates, which create an illusion, a distortion, if you will, in asset prices, where people are incentivized to speculate. When I moved down to Florida a year and a half ago, and the mortgage on a 30-year a year and a half ago was 3%. Today it's 7.5%. So as rates rise, which is beginning to happen, of course, you have an inverse correlation between the pillars of wealth in this country, stocks, bonds, and real estate. And what is concerning about that is the amount of money that was pumped into the system to create what people would say is a bull market, or the greatest bull market ever in equities, or the end of a 30-year bull market in bonds. That was all due to Fed manipulation of interest rates and easy money. It's an illusion, so to speak, where price discovery is broken. And so when we talk about where we are and where we're going to, I would say to you that we haven't seen anything yet, because prices have been distorted to levels really that are beyond imagination, where hedge funds can borrow hundreds of millions or billions of dollars at next to nothing, at call it 1% back a year or two ago, push it all into equities and cryptocurrencies and real estate, jack up valuations to obscene levels, make fortunes, make huge bonuses, and in the meantime have created distortions. Now, when I started in this industry in 1990, I was 20 years old. The interest on the 10-year treasury was 9%. You didn't have inflation that we have right now. And even by the line CPI standards, inflation back then was 2 or 3%. You make a 9% on a US Treasury, you're doing pretty darn well. And in that environment, what you had was called risk on, risk off, right? Stocks are risk on, bonds are risk off. And that's what it always was. And that inverse correlation between stocks and bonds have been prevalent my entire career until now. The inverse correlation between stocks and bonds are gone. And what really that means in a broader sense is that if you look at the pension funds, the insurance companies, the 401k administrators, they're all using a 60-40 mantra, where even most financial advisors use a 60-40 strategy, where 60% of the assets are in securities and 40% are in bonds. And this is done specifically to provide a hedge. That 40% provides a hedge against the speculation, if you will, in securities. Now, that works until it doesn't. And when you talk about an environment where interest rates have been suppressed for so long, the inverse correlation has disappeared, because as rates rise, they both collapse. Now, what's interesting about that, and about your question, is this year, or 2022 rather, the 10-year treasury was down 16%. That's the largest decline in the history of the 10-year treasury. The 60-40 split, third worst year in the history of the 60-40 split. So in other words, people watch their stock accounts fall by 20%. And the hedge, that being the treasuries, which was supposed to protect the 60%, performed almost as bad. And so what you have is an environment where prices on these assets are in free fall, not really because rates are rising. Sure, that's the impetus of it. That's the lighter lighting the fuse. but they're in free fall because there hasn't yet, nothing has reached an equilibrium between rising rates and asset prices that were jacked up unrealistically. And so I think when you look at an environment where rates probably have a long way to go and to find a semblance of reality, because look, the only way you stop inflation is to raise rates above the level of inflation. Now, it's in the best interest, it's in the vested interest, rather, of every single country on the planet to print as much money as they possibly can. It's really, that's their ideal. But at the same time, keeping inflation in check. And the only way that they're able to do that is to lie about the inflation rate, which is exactly what most nations are doing, in particular the US, where they tell us the CPI right now is at 7%, let's call it. So you're earning 3.5 to 3.75% on the 10-year treasury right now, facing an inflation rate double that. But that inflation rate doesn't take into account food, energy, and housing, and it's massaged and manipulated. If you were to go to John Williams' shadowstats.com website, he'll tell you inflation is twice what they're telling you. That the way they used to measure it in 1980 before they changed it to fit the inflationary agenda would put it at closer to 14 or 15%. But even using their numbers, people talk about real rate of return. The real rate of return using the lying CPI numbers, you're still negative 4%, pretty darn close. And so rates have not gone anywhere near where they have to go to not only stop inflation, but to find a commensurate value or some sort of a symmetry between prices of assets and interest rates. And I think we have a long way to go. Quite frankly, I believe that the market will ultimately dictate where interest rates will go as bond prices continue, or bonds continue to be sold off and rates continue to rise. I would say we have a long way to go because the price discovery mechanism has been broken for the better part of 12 years, thanks to the ridiculous monetary policy of the Fed. Easy money, low interest rates has created an illusionary environment or an illusion of prosperity that I think will pop as rates continue to rise because the pillars of wealth, stocks, bonds, and real estate, all achieved all-time highs here last year and are all inversely correlated to a rise in interest rates. So I believe we haven't seen anything yet.
Now, it's interesting, Andy, for me to listen to what the Fed is telling us in their minutes that just got released last week. They're saying that they're going to continue to raise interest rates up a little bit more and then, kind of just leave them, and that no member saw an opportunity where they would need to cut rates. And it was like the market reacted well off that. And it's just like in one ear, out the other. And we're going to pump stocks and, crypto runs back up above 17K for Bitcoin. And I'm just thinking they're so out of touch. They're not listening, or they're calling the Fed's bluff. Do you think that the Fed is actually going to stick to this? Do you think they're going to pivot? What's your expectations from the Fed?
Look at the bond traders are always considered more sophisticated than anyone in the industry or anyone in the financial universe. And the bond traders are calling BS. The bond traders say, look at the inverted yield curve, the difference between the 2 and the 10. And they 100% believe that they will pivot. And at some point over the next couple of years, if not much sooner, that they will pivot, that they will destroy the market, that they will blow things up by raising rates. Just look at what happened in the United Kingdom. Just a few months ago, they were talking about austerity, they were talking about raising rates, and then the pension market started to blow up. So what did they do? They reversed course. They came in and they started to quantitatively ease again to rescue the bond market, to rescue the pension funds. And this is the sticky wicket that the Fed finds themselves in, whether it's death by hyperinflation or death by depression. Which one is worse? And when you take it to such extremes, the way that we did, where you see 100 years or 200 years worth of appreciation based upon the last 100 years in the stock market, where it took over 100 years to get to 10,600, and in 12 years we went up double that. When you see that type of suppression in interest rates and money pumped into the system, creating these distortions in asset prices, it's a big problem, because most of the wealth in this country is tied up in those assets. And now they face a really big problem where most of the people in this country feel that everything will be okay. The Fed will rescue. Look what they did in '08. If we would have sold, we would have been screwed. But now look at it. Yeah, true. But $9 trillion was added to the Fed balance sheet in interest suppressing investments. So just as bullish, Zach, as easy money and low interest rates are to stocks, bonds, and real estate, it will be equally as bearish and catastrophic as a reduction in, or as a rise of interest rates, a reduction in credit. You're seeing credit contract in a massive way. There's $2.5 trillion in the overnight repo market because the banks don't want to lend it out into the system. They'd rather give it to the Fed with safety. So we're seeing a contraction in credit. We're seeing interest rates rise. And, this is not an environment where, don't forget, much of the gain that we've seen over the last several years in the equity markets have been due to share repurchasing, where companies can come in, even though they're not productive in what they're producing, they have the wherewithal to borrow money at next to nothing, buy their shares in the open market, jack the share price to the moon, make huge bonuses, make their company appear to be magnificent, and yet they haven't been any more proficient in producing what it is that they do. This is an environment where that can't happen, and worse yet, these corporations are now, all of their balance sheets are filled with stocks that they bought, and if the market starts to tank, their balance sheet blows up. So the fuel that gave us this massive rally is being pulled out from underneath us, the punch bowl. And if we go back on our word, and we, as every nation has done since the Roman times, choose inflation and the printing press over austerity and tough decisions, we will have lost all credibility. And to your point earlier, I believe this is part and parcel, at least one good reason why you are seeing this alliance of the BRICS and the BRICS Plus form to move away from the Western suppression, the Western manipulation, the Western hypocrisy and hegemony. And, we've destroyed the world reserve currency. We've eviscerated its value, and now we're going to get tough on it after they've raised it or let asset prices go to all-time highs in a low interest rate environment. You're looking at a religious experience where, people can lose 70, 80, 90% of their value. Look at it this way. I mean, I think this is kind of illuminating. If you want to talk about the Fed getting tough on things, if they were to, and they've been talking about quantitatively tightening, which they haven't done. They said they were going to do $95 billion a month. They haven't done that. But if they were to hold true to their word and do $95 billion a month, it would take almost 8 years, 7.8 years, I believe is the number, just to get their balance sheet back to where it was prior to the pandemic. We printed more money in the last 3+ years than we did in the entire history of the country prior. These distortions in asset prices are exactly because of that mismanagement and the ridiculous monetary policies that the Fed has inflicted upon us all. Now they want to get tough, right? After they let asset prices rise to all-time highs. And, I think that it's a disaster waiting to happen, but I guess we'll just have to see. If I had to guess, it doesn't play out well this year.
Well, the numbers aren't lying, and like you said, it was the worst year on record for the bonds, and that makes up about 40% of the traditional, portfolio that they're pushing on people, right? And it's interesting to see how far we've gone, and how much farther we still could go, like you said, right? But what's interesting, I love this quote that you have: "Price is the greatest tool of misdirection." And so I wanted to explain that for people, because people see and they would think that, okay, stocks are getting cleaned, real estate's getting smacked, the bonds have had the worst year on record. That means that people are going to run into precious metals. They're going to run into other assets, right? But we've seen that the prices, although, they did do better than the stocks and the bonds as far as gold and silver, and, oil, some of these other commodities have had fantastic years, actually. How are they using price to misdirect the public and the masses? And in my opinion, the theory that I'm running with is that they're doing this in a way that it keeps the middle class and those out of the opportunity. I call it the greatest transfer of wealth in world history. While they're hoarding record amounts of gold, they're allowing the paper derivatives to suppress the price Can you expand further on that quote there
That's
that I love that
exactly
you have?
right. That's exactly correct. That's exactly what they're doing. And you have to understand that first of all, when we look at the central banks have purchased more gold in 2022 than they did in any year since 1967. It's not just gold. You're looking at countries like India, who accumulated 300 million ounces of silver. That's a third of global mine supply. That is 10 times what is backing the price setting mechanism of the West. There's about 36 million ounces of silver in the registered category on COMEX. Those are the bars that can be immediately delivered. If you look at the entire COMEX warehouse, all of it, all of the warehouses, COMEX, commodity exchange here in the United States, that is the price setting mechanism really of the world. There's about 300 million ounces, of which the majority is called eligible. Those are bars that would belong like to me. I have plenty of 1,000-ounce silver bars in our JFK BRICS depository that are eligible, meaning if I decided to sell them because Elon Musk offered a $20 premium per ounce, I could transfer them to the registered category. But most of the silver held in these COMEX vaults are eligible. They are in strong hands. They are not for sale. The registered bars are for sale. There has been roughly an 80% drawdown in the registered category over the last 18 months. The majority of all of the silver drawdown that we have seen from just this year, 2022, from roughly, let's call it 330 or 40 million to 300 million, is almost exclusively in the registered category, to where it's 36 million ounces or thereabouts. The London Metals Exchange has the lowest amount of silver in the vaults that they've ever had in the 140-year existence of the exchange since they started keeping records. And so you're seeing a massive drawdown. Just a few months ago, in one day, one entity purchased 26 million ounces of gold, 45% of all the gold kilos on the COMEX market. Who likes all the kilo bars? That's right, the Chinese do. Who's been buying all the silver that's been drawn off of the LME and the COMEX? Oh yeah, India just purchased 300 million ounces. The LME watched a 70% drawdown, the London Metals Exchange, a 70% drawdown in aluminum this year, and a 90% drawdown in zinc. Go look and see what China has in terms of aluminum. They now have 20% of global stockpiles. The world, not the US, but everyone over there, are using the manipulation of the metals prices to reposition globally reposition out of dollars into commodities. And I guess I would simply say to you that, look, there's no question that silver is a strategic monetary asset. And this is part of the reason why the BRICS have started buying everything, including silver. But the physical demand is betraying the rhetoric, and the price that we see should be going a whole hell of a lot higher, right? The physical demand is betraying that, as it is manifested in the vault drawdowns to epic proportions, where there's 10 times the amount of silver delivered to a country like India than is in the COMEX vault for delivery. This is a situation that certainly, in my opinion, will not end well. And when you see the central banks buying more gold at any time since 1967, what does that tell you? The biggest money in the world closest to the information is front running what is happening. Massive drawdowns, massive deliveries. And when you see stuff leaving the COMEX ecosystem, it's a one-way ticket. It's never coming back, because when you leave the COMEX ecosystem with a 100-ounce gold bar or a 1,000-ounce silver bar, you have lost liquidity to the nth degree. To get it back onto the system, it has to be reassayed at a high cost and a time delay. So this is stuff that is never, ever, ever coming back. It is a one-way street as far as I'm concerned, or a one-way ticket. So yeah, what you are seeing, look at a company like JP Morgan. JP Morgan, by Ted Butler's estimate, who paid a $920 million fine and admitted guilt to suppressing the metals market last year, 2021, has accumulated, by his estimate, 1.2 billion ounces of silver and close to 40 million ounces of gold, the largest physical position the world has ever seen at one time. Big money is front running what is coming next and using price suppression as a means to accumulating tremendous amounts of gold and silver without alerting the mainstream, without alerting the public. But one other thing that's worth mentioning, gold hit all-time highs. Sorry, I got the sun coming in the window there. Gold hit all-time highs last year, 2022, in euro. It's up 10 or 11 or 12% in pounds. The inordinate, ridiculous strength of the dollar, which is unjustified and won't last forever, has created an environment where things in dollar terms don't look as good as they are, because in gold terms around the world, almost every country on the planet is seeing gold at all-time highs right now in the face of a strong dollar. And it's also important to understand that the last time the dollar was as strong as it is right now, silver was under $5 an ounce. Both gold and silver, which silver was up about 3% for the year in dollar terms, and almost exactly where it ended the year in 2021 for gold, flat, which in both cases outperformed all the stock market indices, the bond market, the real estate market, and the crypto market. Still gets the crap beat out of it by the media and by public opinion. Yet it is that price suppression on COMEX that has allowed the whole world to de-dollarize and accumulate copious amounts of it. But you have to think, look, in the face of a strong dollar like that, it's held up amazingly well. And so before it's all said and done, I think people will wake up and witness the fact that the biggest money in the world, the people closest to the information, have been using price as the ultimate tool of misdirection, suppressing price and rhetoric, and accumulating the crap out of metal where, you know, more so than any time in the last 55 years, the central banks have been buying it. And the fact that gold was reclassified, a high liquid asset or a tier one asset by the central banks, by the Bank of International Settlements rather, in 2019 explains a lot of this. I truly do believe that gold will be the underpinning of a new system, whatever that new system is. When you screw the pooch the way that the Fed has and the West has with world reserve currency, if you don't put some governor backing money creation, no one will ever drink the Kool-Aid again. And so I think that is why you are seeing a mad dash out of dollars and into tangibles, because the BRICS nations have told us that their new currency will be pegged to a basket of commodities along with the currencies of the countries that represent the BRICS.
Yeah. Yeah, and if Andy didn't just make the best best explanation for why I've been, buying silver, why we continue to accumulate some of these silver precious metals and these assets that have been suppressed. I mean, that's what I call simple math, Andy, right? The London Metals Exchange Vault, lowest levels ever, and then central banks hoarding the record amounts, right? And we can't even get the truth about how much some of these countries are actually mining, how much they're actually importing. And then we see just country after country is announcing that we're no longer exporting our lithium. We're no longer exporting this. Or we are exporting, but as we're going to get into with the BRICS nations, we're only accepting rubles. We're only accepting gold. You're going to do our trade deal, and it's not going to be with the U.S. fiat dollars. But I want to bring it back to a point that you made, and my audience is probably thinking this sounds familiar, because I've been telling people that against other currencies, gold is already back or near all-time high. And then in addition to that, you made a point, and I want to make this clear for everyone to understand. I got most of my audience is into cryptocurrencies a lot, and there's this term called diamond hands, which is what we've done over the last years. We've been diamond hand holders as our crypto bags have been absolutely smacked and sacrificed and down over 50%, right? But we still have our diamond hands. That is what you're saying, where the silver, where the gold, the metals are going to is to diamond hand hold. I mean, people that are not going to be looking to sell this off soon. It's not a short-term trade for them, most likely, right?
No, it's not. It's not. And look, I truly do believe that the most sophisticated money in the world is making a transition. And, as Zoltan Pozsar, and I don't know if you've covered him much, but Zoltan works for UBS. He used to be part of the New York Fed, used to be called the repo market guru. Brilliant dude. And he calls the era that we are in right now Bretton Woods 3, an era that will be dominated by commodities rather than by debt instruments. And that's why you're seeing such massive acquisition of of these items that will be used to really back a war chest, as far as I'm concerned. You know, when you talk about diamond hands, 100%. This stuff is never coming back. This stuff will never come back. And when you look at the recent statistics, check this out. China right now, they started stockpiling, that we know of, commodities really since 2019. And it's recently come out that they hold 80% of all the global copper inventories, 70% of the global corn inventories, 51% of the global wheat inventories, 46% of global soybean, 70% of global oil stockpiles, and over 20% of the global aluminum stockpiles. So aluminum supply is down 75% on the LME last year. So who's buying all of this stuff? Commodities to these countries is what will represent, I believe, the foundation of their exodus from the Western system. It gives them liberation and the relationships that are being made. And it's interesting to note, you talked about countries that are not selling any longer. We're not going to sell our oil. We're not. So, you know, we're standing, you got Biden standing up on stage telling the members of the Paris Climate Accord that, hey, we are going to move away, continue to move away from fossil fuels. We're going completely green, right? Well, the problem with that, amongst many others, is that, and in particular, what it means to the world reserve status of the dollar and its relationship with OPEC. But what it really means also is that we have to find ways of getting rare earth metals for battery power, right? Well, earlier this year, the president Widodo of Indonesia, who's been an OPEC member since the early 60s, came out and said, because the majority of all the rare earth metals are found in Asia and China, that he is calling for a OPEC style cartel for rare earth metals for electric vehicles. So wait until that happens. And we've turned our back on OPEC and on Saudi Arabia. I believe we will ultimately lose the world reserve status, or the petro reserve status, and we will be reliant upon China and these Asian countries to give us the materials that are needed for battery production. We are going directly from the frying pan into the fire. And you know, it just doesn't make sense. But the more you look at what these countries are doing, striking deals unilaterally where, you know, everyone is trading with everyone, whether it be in rupee or in ruble or in gold or in yuan. It's not in dollars anymore, and losing the demand for the dollar. And in particular, when it gets forsaken by OPEC and they say, hey, thanks for the memories. Because for your listeners out there, let's remember, what makes the dollar the world reserve currency? In 1974, 3 years after we went off the gold standard, because de Gaulle from France was draining all of the gold from the promise that we made at the end of World War II to the world that you could always trade your gold in or your dollars in for $35 an ounce gold, and we'll always exchange it. Well, de Gaulle from France was taking all the gold, so they closed the gold window. 3 years later, Kissinger went to Saudi Arabia and said, we'll protect you. We got your back. No one will ever screw with you. Before that, you're going to denominate oil through OPEC globally in US dollars. And it's been that way for the last 50 years. So the demand for the dollar, the synthetic demand for the dollar, was created by 50 years worth of every country on the planet needing to accumulate it to buy oil. It is the foundation of every currency. If you realize that every one of the 13 OPEC producing member countries are on the Belt Road, and all of these countries are joining BRICS, and we're moving away from fossil fuels, and all of these countries on the Belt Road, the BRICS, the Shanghai Cooperation Organization, and all of the others that are joining together represent near 85% of human population. What the hell does Saudi Arabia and OPEC need with us? They'll have a bigger military, coalesced. They'll have a bigger economy, coalesced. And they'll have a union that will not be bullied by the West, who is indebted up to their eyeballs and insolvent, and lacks the commodities that the rest of the world is accumulating and produces. And when they say, hey, it's time for us to offer oil only in the new BRICS currency or in the petro yuan bond, which is immediately convertible into gold on the Shanghai Gold Exchange, mind you, whatever it is, if it's not just dollars, the dumping of dollars globally like that will create a hyperinflationary event in the United States that sends interest rates to the moon. and talking about that inverse correlation between stocks, bonds, and real estate to rising rates makes me believe that Jay Powell is what he's doing is a sideshow. It's what BRICS decides to do. It's what the rest of the world decides to do. If they dump the dollar as the Petro Reserve standard, it's going to get really crazy, and it's going to happen really fast. And it's borderline the Great Reset that Klaus Schwab talks about, where the dollar collapses as it's dumped by every country on the planet. And the result is spiked interest rates cratering the three pillars of wealth: stocks, bonds, and real estate, and the dollar simultaneously get hammered. Could it happen? Look, this is a chess game. And if you take a step back and look at the pieces that are being put in place, we could talk for 1 hour and I could give you 50 or 75 or 100 examples of all of these deals, these unilateral deals that are happening, usurping the dollar, and these deals that are being put together that you can see. It's not checkmate yet. But look, here's an example: the M Bridge, the Chinese M Bridge that they just built with United Arab Emirates, and I want to say Singapore, one other country, which is a cross-border payment system allowing central bank digital currencies to trade with one another, sidestepping the SWIFT system. So no more SWIFT sanctions, right? Well, until the BRICS currency is announced, all of these countries are issuing CBDCs, like Turkey just rolled one out. So they'll trade with one another outside the SWIFT system, immediate settlement in their CBDCs using the Chinese M Bridge technology. It's a precursor to the BRICS currency when they all join together and say, hey, our new currency is pegged to a basket of commodities. Like we've been told by one of the Russian finance ministers, yeah, we're going to peg all of our new system will be pegged to a basket of commodities. And it's not just gold. And that's why a country like India is importing 300 million ounces of silver. The handwriting is on the wall. It's not checkmate yet, but if you're playing chess, you have a 1 in a million chance of winning this game, if the West does anyway, if things play out the way it looks like it's going to.
Yeah. Yeah, no, I agree. And it's great that you mentioned that Bretton Woods agreement, because I actually had a super chat from one of our members, Johnny, and he asked the question about Bretton Woods. He says, do you see a new Bretton Woods type agreement with Western nations, and would that aid gold and silver in value?
It has to. They have to react that way to it. And there's no question but that we are entering a system. Look, a CBDC is no different than a dollar. I mean, a dollar, now it is even more inflationary, in the respect that the reason that I think the Fed wants a CBDC is to be able to enact monetary policy directly to the public, instead of having it lent into existence the way that it is right now. The way that it is right now, when the Fed buys treasuries from the banks have two options. They can either lend it out to you and I in a credit card, a home equity loan, a mortgage, a student loan, whatever it is. The act of lending it is how money is created. The act of the Fed creating money and buying bonds only suppresses interest rates. It's actually deflationary because it's pulling stuff out of the system, but lowering rates, creating this environment, this illusion of prosperity where people will speculate on homes and stocks and whatnot. We've already talked about that. But if they don't lend it out, which they are reticent to do these days, as evidenced by the $2.5 trillion in the overnight repo market, meaning they'd rather give it to the Fed at 3% than to you earning twice that on a mortgage or on a home equity loan, or 6 times that on a credit card. Why? Because they see what's coming. And so, this is an environment where it doesn't end well if things continue down this path. But I look, any way you look at it, we're in big trouble, and the banks don't want to lend. And if things play out the way that I think it will, you have a situation where a CBDC is nothing more than a fiat currency until it's pegged or backed by something. And it has to be pegged. And maybe that's why the Bank of International Settlements reclassified gold the way that they did, so that it can be pegged. The 12 billion in gold that the Ukraine sold to fund the war, where did it go? Where did Gaddafi's gold go? Where did Iraq's gold go? Where did Kuwait's gold go? Where did all this gold go? Do we have it? Because our numbers haven't increased. Fort Knox hasn't been audited since 1956. But I will tell you this: I do believe that look, the Fed, they're number two in line behind Powell. Her name is Lael Brainerd. She's a modern monetary theorist who wants to abolish the commercial banks because they're the ones lending the money into existence. Instead, she wants to be able to push a button and enact monetary policy right to you. And so there's no checks and balances there. It will ultimately be hyperinflationary if they have their way. A CBDC is nothing more than a fiat currency unless it's pegged to something. And the only way that it will ever work is to peg it. And that's why guys like Jim Sinclair were famous for saying gold will go, and Jim Rickards, gold will go to $5,000 or $10,000 an ounce and will never come back down because it will be used to peg to a new world reserve standard. And I think whether it emanates from the BRICS first, or the Chinese before the BRICS accentuates, or by the West is irrelevant. I just believe that the mismanagement of the world reserve currency will dictate some sort of pegging, because if it's not, a CBDC doesn't change anything. It just makes a loss of privacy and the ability of the monetary authorities to pump money right into the system, into your iPhone.
Well, and they did this. We have precedent here in the United States where they bought back the gold, right? And then they set it at a higher price. Here we have a similar situation where, as we're talking about here, we roll on into BRICS plus.
Roosevelt. That's it. That's the executive order in 1933. Took the gold at $20 and revalued it to 35, 40% increase like that.
Yeah. So we have that precedent within the United States. But now as we get into this conversation, it's kind of gone from just the BRICS to BRICS plus to BRICS plus. I mean, it goes on because all of these countries are saying we're done with the games, right? We're done with the SWIFT system, right? And we're going to move forward. And so I had sent you 2 articles before we got going here. We got the announcement today that Saudi Arabia is setting up a new firm to invest in global mining assets. So like we were just talking about, right? These countries are making serious investments while Biden is trying to ban natural gas stoves, right? And I've long said that these countries don't care about being woke, right? They are moving full steam ahead, reserve currencies getting stacked, trade deals done in their choice of currency, right? And they have a whole new leverage at the table here because, like you said, they actually have real commodities, real rare earth minerals, the resources that are actually going to run this new financial system. The fake economy, the fiat economy, the reserve currency status of the dollar, as it dies, we're finally starting to see. Because, for people like yourself and the Peter Schiffs of the world, they've been talking about this, right? Jim Rickards have been talking about this reset, revaluation. And, you guys have, the haters that say that we've been wrong, right? Well, everything's still at play, but we're now finally starting to see that new financial system break through. And we get announcements like we got today about Saudi Arabia setting up a new firm to invest in global mining assets. But then I also sent you the link. We have Sberbank, the largest bank in Russia, which controls, I think, about a third of the assets, the banking assets in Russia. They launched the gold-backed digital financial asset is what they're calling it. And so we're starting to see here the merger of the new world, the digital technology, distributed ledger technology, with the old world. And so you got some camps that don't believe that gold is just a relic of the past and has no value. And a lot of them tend to be Bitcoin maxis. And so they would rather own Bitcoin. We'll see how that program's going to work out for them. For me, it's that merger and understanding that these precious metals, there's a reason why tier 1 asset for gold by the Bank of International Settlements matters. There's a reason why all of these central banks are hoarding a record amount of gold. Now we have to pair that up with distributed ledger technology that actually works. So like I said, me and the crypto community that we have on my platform, we're interested in it all. We think that cryptocurrency is a massive opportunity, but only for real utility. Distributed ledger technology that can handle commodities, can handle an internet of value. And you make the point that China has rolled out their test. And for the last couple years here, we've seen they've ramped up to, I think I heard you in an interview say 20 billion in settlement. I was looking this up before. I saw 14 billion at the start of the year. So I don't know where that ended up, but 20 plus billion in settlement already with the digital yuan. And it's interesting because my community, we're heavy into XRP, Ripple, and Ripple, the company, got tied up in this SEC versus Ripple lawsuit. Now, I'm not going to break down the whole conspiracy theory that we have about the criminal corruption, the influence of, basically Chinese communist money infiltrating our three-letter agencies to suppress and hold back an asset here that actually, does get something done, and an American company that is trying to move. And the first use case was cross-border payments. But if you look at XRP and some of these other utility cryptocurrencies, they're ready to handle liquidity and volumes in the trillions of dollars every single day. But there's a little bit of speculation in my community that basically this has been an opportunity to attack and hold back a solution here out of the United States, while allowing other entities, other parties to get ahead. And like you mentioned, Digital Yuan already doing 20 billion in settlement. It's interesting because Ripple just confirmed that they have done about 30 billion in settlement with on-demand liquidity, which is a product that settles in XRP. Since 2019, they've done 30 billion in settlement. So you see that we're right there in comparison versus what, Ripple's trying to do and how the SEC kind of stalled them out. They have a Bank of America partnership that goes back to 2018, but Bank of America just said at the Ripple conference in Swell, London, that they're waiting for the case to end so that they can use XRP for a competitive advantage. But until we have regulatory clarity, United States banks can't move and adopt this technology. So I just thought that it was interesting that you brought that up, the Digital Yuan, how they've had 20 billion in settlement. Ripple on-demand liquidity is at about 30 billion. And so you see how they're starting to catch up. My question to you, Andy, is do you think that the Western powers that be have something up their sleeve? Like you mentioned, do we actually have the gold? Or are they just going to let them move ahead without us? Part of me thinks that they don't really care about the middle class and poor getting left behind, but they have plans on the back end to consolidate the commercial banks, like you said, roll out the CBDCs. They hoard the gold. They take advantage of the transfer of wealth while the middle class and poor get wiped out. How do you see this playing out, Andy?
Well, I often wonder if the things that our stupid administration have done have been coordinated and thought through. Look, we have a $30 trillion debt and 150 trillion in unfunded liabilities through Medicare and Medicaid, Social Security, government, military pensions. A trillion seconds ago, Zach, was 31,688 years ago. The numbers are insanely large, most of which was accumulated at amongst the lowest interest rates in human history. Could it be the Great Reset that Klaus Schwab talks about? Did they try to blow things up by weaponizing the dollar, finding a villain that we can blame, Putin and Xi and OPEC? Could they be that stupid to not understand the consequences? Do they want everything to blow up because asset prices? Look, if you wanted to draw up a novel on how to blow things up, well, you create more money in the last 3 years than in the history of the country preceding. You keep interest rates low, you let asset prices go to the moon, and then you weaponize the dollar and make everyone in the world think, are we next? Are they going to fuck with us the way that they did Russia? Why do you think China is dumping bonds at the degree that they are? 80, 70, 80, 130, 40, $50 billion over the last 7 or 8 months. Everyone's dumping. No one's buying our treasuries anymore, and so I wonder, is this the way of the West to get out of a situation that there is no way out of? To have a reset, to start over, then roll out the CBDCs, peg it to gold. I don't know if we're going to do that or not. I wonder how they plan on getting out of this.
Sorry to interrupt you, Andy, but it's interesting you mentioned that because China's actually saying that they're not having as much adoption, even though they're trying to use incentives. They're trying to use different incentives for people to use the digital yuan, right? Trying to credit them. And obviously we know that they got their score system going on, right? But it's interesting. They're still struggling to get adoption. So like you said, they might need that max pain moment to usher in that CBDC.
Yeah, and if you have nothing and you've lost everything, a little bit of incentive goes a long way. I don't know that that's really the plan, and I don't know that we have an ace up our sleeve or not. I mean, all I can simply tell you is that the policies that we have enacted, to me, are very counterintuitive to what you would do to try to mend fences and drag yourself up from your the depths of where we really are. And if you look at the number of countries that are moving away, we know Brazil's, our BRICS stands for Brazil, Russia, China, India, South Africa. Algeria, Argentina, and Iran have already applied, as has United Arab Emirates. Saudi Arabia just applied. Nicaragua, Turkey, Indonesia, Senegal, Nigeria, and Afghanistan, and Egypt and Kazakhstan all have as well. And then you get into the BRICS Plus, where these countries are yielding considerable influence in their own backyard. With Brazil, they're talking about Argentina in Latin America, Nicaragua in Central America. In South Africa, you have Saudi Arabia, Algeria, Egypt, Iran, United Arab Emirates, Nigeria, Senegal. In Russia or near Russia, you have Afghanistan and Kazakhstan. In Central Asia and Indonesia, you have, or in India, Indonesia and Thailand. And so you have all of these countries that are joining, but now they're talking about another group of countries that have expressed interest in Central America: Costa Rica, El Salvador, Guatemala, Honduras, and Panama. In Latin America, Bolivia, Chile, Cuba, Ecuador, Peru, Uruguay, and Venezuela. The Caucasus and Azerbaijan, Mongolia, Pakistan, Turkmenistan, Uzbekistan, Pakistan, Sri Lanka, and Vietnam. They're all joining. Now, I find it very interesting when you talk about gold as being a part of things. Listen to the gold reserves as a percentage of assets, as a percentage of reserves that these countries hold. Venezuela, 82% of their reserves are in gold. Uzbekistan, 65%, Kazakhstan, 63%, Bolivia, 55%, Lebanon, 49%, Belarus, 40%, Turkey, 29%. Turkey purchased more gold this year than just about any other country on the planet. They are a Western ally, but now they've said they're going to join BRICS. They just rolled out their new CBDC. They're massively accumulating gold. They're working out deals with Russia and China to buy and sell energy outside of the dollar. All of these countries are leaving, and they are using commodities and gold as their stepping stone to the new system. So whether or not the West has an ace up their sleeve, whether or not we have the gold that we say that we do, whether or not this is potentially a reset moment, finding a villain instead of the Fed being blamed for blowing things up, it's those bastards OPEC, it's those sons of bitches Russia and China. I can't believe they did this. We didn't do anything. They did it to us. And OPEC, how could they do this to us after protecting them for all of these years? Well, look, each and every one of those countries that I just mentioned, in and of themselves, couldn't stand up to the US if they ever tried. Put them all together and watch what happens. And now you have a system very similar, I guess you could say, to NATO, only on steroids, with all of the commodities. And the rallying cry, if you will, that brings everyone to the table is the sanctions, is the hypocrisy of the West. The glue that makes it stick would be commodities back to a distributed ledger technology. So why do I think the digital yuan will be the backbone of it? Because it has worked, because they did roll it out at the Winter Olympics. It has proven to work in the neighborhood of $20 billion in settlement. So the rails work. What better way to roll out a CBDC but then to show what is backing it, what is backing this new system for the whole world to see, all of the commodities pledged to this distributed ledger. I think it makes it certainly more attractive. And when you talk about that moment where everything blows up, what is the way that you can blow everyone up in this country? You'd raise interest rates to a level that blows up all of the assets, because everyone who's wealthy in this country is wealthy in one of three ways. $4 in their bank account. If it's dumped, those collapse. Stocks, bonds, or real estate. Interest rates spike in a hyperinflationary environment to compensate for the massive loss of purchasing power, and everything disintegrates like that at once. You now bring everyone down to a common denominator, and a little bit of incentive and help from the government with the new CBDC may be just what the doctor ordered. Now, again, this is all opinion and hypothesis, but Occam's razor says something's going on and the rest of the world is coalescing against us. How does it all play out? What does it mean? How does it end? Don't know. But I do believe that if you are not a contrarian, you're going to be a victim. And you can see the biggest money in the world. Like if you look at this right here, when Roosevelt confiscated gold in 1933, the majority of the wealthy people in this country didn't lose any gold because they were clued into what was coming. All of the big, the politicians and all his buddies sent their gold by steamship to the safe deposit boxes of places like Switzerland. And to this day, I'm very good friends with the largest importer of $20 gold pieces in the world. And most of them come from the Swiss banks and the banks in Europe where they were held. And they were all sent out prior to gold being confiscated. Why is it right now that the biggest money in the world is accumulating gold at the biggest pace since 1967? If you go back to 2019 when the BIS reclassified gold, go back 2 years. 2017, the Bundesbank out of nowhere tells the world, we want all our gold back from the Fed. Now, they started a process a few years earlier, but got loud about it in 2017. And within a few weeks of that happening, the Dutch National Bank, the Bank of Austria, Turkey, Hungary, Poland, the Czech National Bank, they all said, give us our gold back. And to the Bank of England, the next year, 2018, they bought more gold as a group than they did in the 60 years previously combined. 2019, those numbers are up almost 100%. And then the BIS makes the announcement. Do you think that's a coincidence? Or did the BIS say to all these banks, start buying gold, bring your gold back, because we're going to reclassify it and make it an important part of the next system? So the big money is always 2, 3, 4 steps ahead. Do you think there's any coincidence that you see the largest accumulation of gold since 1967 right now, as gold is muted in dollar terms? No, I don't. Price is the tool of misdirection. They're suppressing gold so they can accumulate it. It's hold it down with paper because they got more paper than they need, and then buy up all the real things because no one's looking at it. Everyone's distracted by other things. And I think that is something people need to understand, whether it be Roosevelt's cronies, whether it be the central banks buying it and accumulating it and repatriating it 2.5 years before the BIS makes the announcement, or 2022 showing the most gold accumulated since 1967. To me, these are not coincidences. These are front running by the people closest to the information. The most well-funded, well-informed, influential traders on the planet are repositioning and using suppression of price and of rhetoric to achieve their ultimate goal because they see what's coming. Everything has a cycle. And I would argue the Keynesian experiment and the Western system and the dollar as the petrodollar, as the world reserve currency, the singular world reserve currency. If this is a baseball game, I'd say we're bottom of the 8th, top of the 9th inning. Don't know how it ends. Don't know if we can hit a grand slam at the end of the game to make a walk-off home run and change things, or are we going to get, we're going to get beat and now have to start over? Don't know, but I'll tell you that the pieces that are all lining up make me feel that we're in big trouble, better than we are in a good position. So I hate to be doom and gloom because you know what, man? I've been doing this since I was 20 years old. And for the majority of my career, I'm 52 years old. The majority of my career, I owned gold and bought it every 2 weeks, gold and silver. I've purchased it for 33 years. I have never missed a 2-week period. It was a promise to my father when I started this company with him 33 years ago that I will buy every 2 weeks. It was the only rule, he said. When we started, it's the only rule. I'll fire you if you don't do it, he said. Well, I've owned the company for over 20 years myself. I've honored my word. I won't be fired anymore, but I accumulate gold and silver every 2 weeks and have for 33 years because to me, it is and always has been wealth. Wealth that I hope I never need to use. Wealth that has outlived 2 world wars, German hyperinflation, and the Great Depression, and is still immutable. And you can see that by the accumulation by the most sophisticated, well-funded, well-informed investors on the planet. And it's just been the last few years where I'm frightened. I got 2 young kids. My youngest kid is 15 years old, and I'm scared shitless for the world she's growing up in. And, I never used this type of rhetoric to talk to people about gold. I have always talked about gold and silver as being wealth and savings. And it is, but it's also, in my opinion, a life raft to the global changes that are happening right now. So Whether you think I'm right or whether you think, gold and silver just need to be a hedge in someone's portfolio, I'm okay with both. But I would simply say that if you aren't holding some hedge outside the dollar right now, you're making a big mistake, because I think the days of the dollar as the singular world reserve currency are coming to an end.
Yeah, and I think that it's interesting as we, they don't want to call it a recession here that we just had in 2022, even though what I've seen and what I felt from Main Street is that it is getting tight. And now we've reached a real point here this winter, and we can see that from some of the numbers and data, right? That the record amount of credit card debt that we've achieved, lowest amount of saving rates, and the interest rates are starting to go up. And all these people that are having to, renegotiate their mortgages on adjustable rate mortgages, we're coming to a new reality and it's finally catching up with us. And it's interesting that we see this, right? Like while they're all moving ahead, making sure that they stockpile the reserve currencies, do new trade deals, and continue to develop, they're putting us through a recession. And so for the average person, right, they're still living paycheck to paycheck, just trying to figure this out. Andy, before you go, I wanted to get two things. I wanted to get your predictions here on. We did kind of talk about this earlier about the Fed on how you think that they're going to play this out. Do you think that they're going to stick to a couple more interest rate hikes and then letting us coast out the rest of the year, or do you think that we got a pivot coming? And after you answer that, I have one more follow up too.
I think that, look, if you take Jay Powell at his word, his hero was, what's his name from 19, Paul Volcker.
Right.
Volcker raised the federal funds rate to 19%, 18.5%. We're a long ways away from that, and if they hold true to the word, then they'll continue to raise rates. The bond market says no, BS, or they're going to pivot halfway through the year. You can see that by the inversion. Look, the only way that you get things under control, I think, is to create a massive recession, borderline depression. Is that what he wants to do? Don't know. If I were to follow the most sophisticated traders here in the States, I would say they pivot sometime by summer. And when that happens, it signals hyperinflation. It signals that they have chosen off inflation over austerity. We'll never get back. We'll never get back to where we need to be. So I don't know how they played out, but I for sure think that we will see some more pain with rising rates. The fact that they've already gone from 75 to 50 basis points, the fact that they're not selling 95 billion a month like they promised, is already a form of a pivot. I think that's why the bond traders see this. Look, if they don't pivot, it's going to be rough. It's going to be a rough time as rates continue to rise, because at some point the pension administrators, the insurance companies, they have to sell the bonds because they're being eviscerated by them. And this was supposedly the conservative part of the portfolio. If they do that, that only raises rates higher and creates a bigger problem. It's a sticky wicket that they're in. Don't mean to not answer that question, but other than to say, I think that they will raise rates until there is such an outcry for them to come in and reverse course that either they do or they blow up the entire system. If I were betting, I'd say they do pivot, probably sometime where they actually come in and start quantitative easing again. It would have to be sometime maybe in the third quarter, but I guess we'll have to see on that. Don't know for sure.
It's tough to take them at their word, isn't it?
Everything they say is a lie. First it was transitory, then it was structural, and what's his name? Ben Bernanke said that the housing subprime market problem is contained. 2 months later, it blows up. You can't take them at their word for anything. And so maybe do the opposite of what they say. He says he's going to get tough on things. Well, maybe the bond market knows better. Maybe he won't. Maybe he has to pivot. But when they do pivot, that if I were the BRICS nations, the day they pivot is when I would flip the switch. Just like the day we left Afghanistan, Russia signs a joint military cooperation agreement with Saudi Arabia. Saudi Arabia and the protection of the Saudi kingdom is what has given the dollar its world reserve status. The day we left Afghanistan, turned our back on the freedom fighters from Afghanistan and left our own servicemen and women, which would have been unthinkable in the world I grew up in, behind enemy lines. There is no coincidence of the announcement of that deal, which was the end of the petrodollar in my mind at that moment. And if we go back on austerity, on the tough decisions, on trying to get things under control, that would be the day that I would flip the switch, or really start the switch flipping, or make an announcement that would that rattle the world, that now OPEC is taking oil in other currencies, not just the US dollar. And because why would they want to take dollars that are being inflated away and treasuries that are yielding a negative real return when they can sell it for gold to the rest of the world, or for a currency that is backed by commodities, or whatever it may be? Our days are numbered. And if they do that, which the smart money says they will, it will only incite and expedite the beginning of the end.
That's interesting. I've never thought about that or put it that way. That would be the perfect opportune time for BRICS to flip the switch, is when the Fed pivots, right? Because that is the admission from the Fed that they have nothing left. And like you said, when they announced that they were going to offload their balance sheet, I'm like, who's going to buy this shit? Nobody wants the treasury notes anymore. Nobody wants to buy this stuff. So who are you going to sell it to? And right, and so as you said,
if we're supposed to believe that the Cayman Islands is the biggest buyer of our treasuries, well, I got a bridge I want to sell you. So you're right. Who bought all the bonds the other day, dropping the rates from 4 to 3.5%? Huge drop. Or, who is buying that garbage, yielding a negative real return? No one but the Fed. You're right. And that's called monetization of assets. That's the beginning of Weimar Republic. When it becomes obvious and evident to the world, bang. And they can point to that and say, why would any of you want to sell anything to this country who is destroying the value of the currency you're getting back in return?
It's funny you mentioned the Cayman Islands, because that's the place that all the auditing, quote unquote, auditing firms for cryptocurrency have been coming from too. So it's interesting. And before you leave, I wanted to get your take on crypto. We talked about Digital Yuan and the success that they're having. For me, just my background, we're kind of in the camp that most of crypto goes away. The 20,000 different tokens and NFTs and BS goes away. And there's going to be, basically CBDCs for most central banks are probably going to be rolled out. And then there's going to be a few winners, think of like Amazon out of the tech bubble, that are really going to have utility and solve real problems. Obviously for us, what I've been doing is I've been hedging both ways. I've been stacking silver, and then I've been stacking a lot of cryptocurrency so that I'm hedged both. I got the old world asset, I got the new world asset, but like we said, these old world assets are still, going to be used to back the new system, right? But I wanted to get your thoughts. Like I mentioned, the Cayman Island audits of FTX that was out of the Bahamas, right? And then, some of these stable coins too that are running the space. We're in a camp that 99% of it goes away. Where are you at with crypto digital assets and the future of that?
Yeah, I mean, it's almost as if the regulators or the government let all of this happen so that they could come in and regulate the industry without the outcry from everyone saying, no, you can't regulate this. So, yeah, I think it will be those with utilities will be allowed to be regulated and will stay. Does regulation ruin the purity of what cryptocurrencies stand for? I'd let you answer that question, but I do think it will only be the ones that have utility that will survive, the ones that are transparent that will survive. And you look at something like the Grayscale Bitcoin Trust that won't show the ledger. I mean, that wouldn't fly in a regulated market. And I don't, guys like Peter Schiff, who I respect a lot, say we don't need more regulation. Just look at Bernie Madoff. He pulled off the greatest scam ever, and it was a regulated market. But I think that if the regulation does anything, it would limit the ability to issue cryptocurrencies that didn't have some sort of documented utility. And so the days of making money on something like Dogecoin may come to an end. And I agree. I think the majority of them will go by the wayside. Bitcoin, Ethereum, Ripple, the utilities or the cryptocurrencies that offer utility, that offer payment transfer, or some utility, let's say distributed ledger technology in voting or whatever. I mean, yes, I think there will be some that work. And NFTs, maybe, who needs a picture of a monkey, but how about a title, like a title to your home? Or to your car or whatever. Yeah, that's a good way to hold an NFT. So I think some things will work. And again, I'm the wrong person to ask. I'm old school, but the only crypto that I own is Theta, because Big Swear is a dear friend of mine, and Theta has Utility. Has it been a good investment? No, it's been horseshit. But I still hold it and I'll hang on to it because he's convinced me that there is utility in it. Fine, I get it. I am not a crypto basher, but I do believe that the only way that it will work over a period of time is to offer something that the world needs, a form of utility, and then it works. And
Yeah.
short of that, I think where you will find things be regulated will be the issuance of cryptocurrencies that have no utility and no value other than the greater fool theory. Get rich and sell it real quickly to the next guy.
Well, it's interesting because I just put out this tweet and, it's just in my perfect world, this is what would happen. I want to see what you think about this. I said, in my perfect world, the United States would issue an gold backed CBDC that was built on the XRP ledger so that it had great interoperability. The XRP ledger is known for being efficient, scales up to, hundreds of thousands of transactions per second, and has had no downtime in 10 years. So a gold-backed CBDC on the XRP ledger that actually had respect for privacy and individual liberties. But as I prefaced it with, that's in my dream world, right? The perfect world, which does not exist. And as you're well aware of, the SEC has sued Ripple. So we've been in a stalled lawsuit for 2 years. And Ripple was one of the few companies that was transparent, set up an office in DC, tried to do things the proper way and work with regulators, and partnered up with banks and financial institutions, right? And the SEC chose to go after them. But
Well, maybe that's the reason why, because it's a threat to the system,
yeah,
to their system. A lot of people think President Kennedy was killed not by a lone gunman, but because he wanted to issue silver certificates and take away the power of money creation by the Federal Reserve. When you start to threaten the highest up of the Western system, you're going to run into some challenges. And I think that's probably why it was and is in this quagmire with the SEC that seems to never get resolved. Maybe that speaks to the integrity of Ripple and just how good it really is. And that's why a lot of people are sticking with it, perhaps. To your point, that would be amazing. The only other piece of the puzzle would be who is storing the gold and who's auditing the gold. And that would be another important piece of the puzzle. Is it held in where is it held? Is it held at the US Mint? Is it held in third-party vaults that are audited by the big three accounting companies and those kinds of things? Because if you look at something like SLV as an example, the ETF, during Silver Squeeze, they were getting so much volume that they had to come in and say, well, they changed the perspective over the weekend, the prospectus over the weekends, and say, well, there might be more silver. We may sell more shares than there is silver behind it. What I'm getting at is that you can offer a stable coin that is amazing in every way, but who's auditing it? Where is it being held? How is it being held? So lots of pieces to get that puzzle to work, but I agree with you. That would be fantastic. And it would be cryptocurrencies like that have a future in this world, and no question about it that they are a whole hell of a lot more efficient. I mean, we use BitPay as an example for people who want to pay in Bitcoin, and my first experience was a $3 million order with Ethereum on a Saturday night, and it was in my bank account like that. I'm like, oh my God, I've never seen anything like this. Yeah. This is amazing. Yeah. And I was a believer at that point in the utility offered by something like Ethereum. So I don't know, man. I simply would tell you that we are in the middle of a sea change. And the only ones that are going to work are, if I had to guess, like you said, will be the ones that provide a benefit and a utility to people that will be snake bitten once all of this, just like the folks at FTX were, and that's why you're seeing maybe so much in the way of crypto self. People are afraid. Well, the same thing will happen if the Western system fails. People will be afraid. And the only thing that's going to work is something that is transparent, that provides a utility that people feel comfortable about. That will create mass adoption. And so, to your point, yeah, everything that you said makes good sense. And I'm sure those like Ripple and Bitcoin and Ethereum have a future. The rest, probably not so much.
Well, what's interesting, and I'll end on this, what makes this story so damn fascinating, I think it's going to be one of the greatest financial stories ever told when it's all done, however this Ripple versus SEC case settles up, is because even though that's just my wild dream and my perfect world, the 43rd Treasurer of the United States, Rosie Rios, went and joined the board of directors at Ripple. And so we literally saw, and she confirmed with us, you can listen to some of her speeches. She said that the gold is in Fort Knox. So if we take Rosie on her word, she says the gold is there. And then she was tasked with actually creating the most recent version of our currency and her signatures on many of our bills. But then she goes to join this little startup company with this little crypto project, right? Ripple. And, it was just another interesting connection in this whole story with XRP Ripple, one of the few real utility cryptocurrencies, in my opinion. But yeah, I really appreciate you coming on, Andy. Like I said,
I'd
guys, you
love
can
to
head
do
on
it
over to
again,
his
man.
website.
Anytime. I'd really love to come back on anytime. I enjoyed our conversation a lot.
You laid it down, brother, and I really appreciate it. MilesFranklin.com is the website. You can also find Andy over there on Twitter as well. Get in touch with Andy. Great guy, great information, and I absolutely appreciate this session. On the way out, guys,
Likewise.
do me a favor and smash that thumbs up for us as well. Spread this message far and wide. I think a lot of people are going to enjoy this session. Andy, thank you once again.
You got it, brother. All the best to you, and I look forward to picking up where we left off, hopefully real soon.